As we approach year-end, time is running out to make some last-minute tax moves. What should be on your radar, either to say, nah, it doesn't apply, or yes, I want to get that done and need to do that before 12/31. I've got that list and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Tax planning is a year-round process. It's like, oh gosh, no thank you, right? But taxes, who wants to think about it all the time? But tax planning, that's a creative work and really designed to do two things: help you pay the least amount of tax over your lifetime. Yeah, this sounds geeky, but I'm all for that. And help avoid tax surprises. No one wants a tax surprise, right? And so tax planning is that proactive work as part of your comprehensive financial plan. Tax planning is one of the 6 areas of your financial life, but it's that proactive tax planning work to help you accomplish those two goals: pay the least amount of tax over your lifetime, maybe multiple lifetimes, and avoid tax surprises. Some tax planning strategies, we've talked about this a lot, but some tax planning strategies have a deadline. A 12/31 deadline, where if it's going to help this tax year, it's got to be done this calendar year. Other things, you've got up until April 15. But as we approach the end of the year, what are some things that do have that 12/31 deadline that you've got to maybe consider and either say, yeah, that doesn't apply to me, or that does apply and I haven't done that yet. I need to take some action before the end of the year. Well, I have several things to hit. We're going to put them into 3 different groups and just sort of skim the waves. The first group is last minute or year-end tax planning strategies with your investments, okay, with your investments. So what would that be? First is doing a Roth conversion. If you are currently in a lower tax bracket today than maybe you expect to be next year or out there in the future, maybe you want to say, well, it's not going to help me pay the least amount of tax this year, but it will help me pay the least amount of tax over my lifetime. And I'm going to invite some income onto my return this year by moving some money from my traditional IRA or pre-tax 401k, move it over to my Roth IRA or Roth 401k. That maneuver is taxable, okay? The amount that you do, if you do a conversion of 30 grand or you do a conversion of 150 grand, whatever the number is, that amount lands on your tax return for this tax year. But you've got to do it in this calendar year. Get a plan for your withholdings and all that sort of stuff, but work with your certified financial planner, see if that makes sense, and do that Roth conversion before the end of the year. Also within investments, it's been a fantastic year on Wall Street this year. And so maybe you should invite some gain on this year's tax return as well, doing some tax harvesting, some capital gain harvesting, and maybe if you own some individual stocks, or maybe depending on when you were investing, maybe you have even some areas that have underperformed while the rest of the market has really done well, and you actually have some capital loss. Consider doing any buys and sells outside of your tax shelters. If you have a brokerage account, individual account, joint account, look at that capital gain, capital loss, and look at your tax picture to see if you should harvest any of those gains or losses to make sure they land on this year's return. And then finally, within your investments, year-end tax planning, make sure if you are required to do so, you take your required minimum distribution. This could be for you if you're required to do so if you're age 73 or older, or if you've inherited an IRA from someone else. If you inherited the IRA from someone that passed away before 1/1 of 2020, you can still take out just a little bit every single year via a stretch IRA, and you're required to do that this year as well. If you inherited instead the account from someone that died after 1/1 of 2020, you now apply, it's the new 10-year rule, which we've talked a lot about. It's very confusing. And this year you could take a required minimum distribution from that account, but you don't have to. Next year you have to. So work with your CFP, see if that makes sense for you to do. So that's the first sort of grouping. The second grouping of year-end tax planning that you need to do is regarding withholdings. And first is tax withholdings. Part of that is part of the tax planning that I mentioned is avoiding tax surprises. So double check, make sure that you've had the right amount of withholdings for taxes, for federal taxes, for state taxes, local taxes even, and make sure that you're not going to have a big tax surprise because interest has been higher on money market accounts and savings accounts. Maybe there's capital gains that are going to land on your tax return this year. If you don't have a plan for those and your withholdings, or maybe making an estimate, now's the time to do so. If you're going to do withholdings, that has to be done by 12/31. If you're going to do an estimate, technically you have until January 15, but you'll want to do that as well. The other part of withholdings is if you have a workplace retirement plan, you might have one more paycheck. You might have a bonus that's coming where you can say, you know what? I actually want to defer that. I want to withhold that towards my 401k and not have that income land on my tax return this year and not use it this year. I want to defer it towards retirement. And so if you have a final paycheck or maybe a bonus that's coming, make sure that you're aware of what tax shelters you could be funding, and you can do that right out of your paycheck. Your 401k has to be contributed to out of your paycheck and therefore has to be done by 12/31. And then the final cluster or grouping of year-end tax planning is within the category of giving. Okay, and let's first think about giving to charities, right? Those need to be done. Those gifts need to be completed by the end of the year, 12/31, the calendar year, in order for them to help on your taxes this year. So whether you're age 70 and a half or older and want to do something called a qualified charitable distribution, make sure you do it in this calendar year. If instead you're just giving to a nonprofit, a 501c3, and you want to itemize, or you think you're close to itemizing, make sure you make that completed gift by the end of this year so that that donation shows up on your tax return this year and it can help you on your taxes. If you think, I do have a lot of giving that I want to do or still need to do, but I'm not going to itemize this year, consider opening a donor advised fund and stacking a couple of years worth of your donations all into one calendar year so you get over the hump and are able to itemize. And then you can distribute those dollars from your donor advised fund out there in the future. Even if it's not immediate, you can stack your donations into 1 year so you can get a tax benefit and then release them to the charity when you feel comfortable doing so. And then the other side of giving, of course, is giving to family members. This year's annual gift tax exclusion is $18,000. You can give $18,000 to anyone, family member or whomever, and you don't need to report it as, they don't need to report it as taxable income. You don't need to report it as a gift. You can even do gift splitting where if you're married or the person you're giving to is married, you can do $18,000 to each of them, or your spouse can do $18,000 to each of them. So there's a creative way where you can give a lot of money without it really counting towards your lifetime giving allowance or exclusion that the IRS gives you. It's $18,000 for this year, so be aware of that. It's moving up to $19,000 next year, not a big change, but those gifts need to be done by 12/31. So that's a crash course. It's a quick list in 3 different groupings of some last minute or year-end tax planning that you could be doing. May not apply to you, not all of them. Some of those, though, might have spurred, yes, that's something I still need to do. You have until 12/31. Work with your certified financial planner on that proactive tax work to both improve your tax picture so that you pay the least amount of tax over your lifetime, if not multiple lifetimes, and avoid tax surprises. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com, that's Korhorn with K, wisemoneyshow.com, you can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.